Despite the amazing progress and innovations that we've seen in digital payments over the last 30 years, cash still has some pretty unique qualities. And one is that it works even when the payer and payee have zero connectivity. Both parties can be completely offline and cash still works perfectly. Now, the digital euro is not aiming to replace cash, but it is aiming to provide this same facility to be able to exchange digital euros directly between two digital wallets. Now, why is that needed? What challenges does it present? And what are some of the ways that this can work from a technical point of view? Let's find out as we navigate digital payments.
Welcome to the Navigating Digital Payments podcast, brought to you by Worldline, bringing you the latest innovations, trends, and predictions about the future of payments.
Hello and welcome to this episode of the Navigating Digital Payments podcast. I'm David Daly. I look after the Discovery Hub here at Worldline. And today I'm really excited actually to be delving into this topic of offline payments with the digital euro and how those are going to work, why they matter, why they're important, with two people who've been pretty close actually to the development of this so far. So joining me today, we have Sylvain Fourny. He is the Portfolio Manager for Digital Banking at Worldline. Sylvain, welcome to the podcast.
Hello, David.
Really great to have you on board. We also have Ramuntcho Goyenetche, who is the CBDC, which stands for Central Bank Digital Currencies, Solution Delivery Manager at Worldline. Ramuntcho, welcome to the podcast.
Hello, David. Thanks for inviting me. It's a pleasure to be with you.
Really good to have you joining us as well. So, as I mentioned in the introduction, I'd really like to hear from you. Firstly, why the digital euro proposal is including this offline payment facility. Also interested in what some of the challenges are around actually implementing that. And then also what some of the technologies or the approaches are going to be that can make that work. But before coming on to all of that, Sylvain, maybe I can start with you. So I know you were involved in some of the prototyping work with the ECB, the European Central Bank, which looked at this topic of offline payments. So could you share a little bit more about what was involved with that prototyping exercise?
Yes, of course. The story began in 2021 when we start with a POC with the ECB to build a first way to do offline for future digital euro. We discuss with the ECB and work on mainly at that time on UX, and first question around security and what we can do. And then at the summer 2022, we were selected by the ECB to go much more into detail to build a prototype, as you say, that will lead to going in more depth in detail on how it could work on the hardware part, hardware secure elements, and how all this would lead to the future version of this offline digital euro, and what kind of architecture we will have to put in place, what kind of components will be mandatory for error exception management and things like that. And of course, on the managing all the risks and the principal risk that are on offline, that could be the double spending or things like that we, of course, as the ECB wants to avoid.
I think already your answer reminds me that offline digital payments is probably something very easy to say and actually pretty complex to implement and to achieve. And so really interested actually shortly to come on to some of those challenges actually and some of the ways of solving them. But maybe before coming on to that, Sylvain, I could also ask you to take a step back, if you like, and understand, why do you think having this facility to make a digital payment completely offline, why is that considered to be so important?
I think your introduction was clear on that. The cash way of doing this exchange is really the target, and saying, okay, we want to have this facility and this ease of use of having this kind of offline exchange that will work even if we do not have a network on the European area level. Okay, it could occur if the network is not really resilient totally. Main thing for me, and why is it so mandatory and so important for digital euro, but not only for lots of CBDC, the offline part is really important, is because of these similarities to cash. That's the best of both worlds, the digital and the physical world. So that's really important for a central bank to keep that. For me, it's also a key differentiator with other payment solutions. Lots of digital payment solutions that are available already on the European market are not available on offline. Of course, it leads also to more financial inclusivity. You do not need to have a smartphone, for example, to be able to use that kind of solution if it works also on offline, and you can use just a smart card or things like that, and that could be really important. And I think also, even if it's not really something that is said a lot, but I think also it will be useful in terms of crisis management. You remember electricity crisis, for example, that were in Europe at one time. In that case, network and data network may not be something that we keep, and we will maybe have something more important and more urgent to keep if we have to choose between sources. And so offline payments will be useful also in that kind of crisis management, I would say.
And it's interesting that you bring up the resilience topic, and we've discussed it a little bit before on the podcast, actually, that with so the digital euro is not aiming to replace cash, but of course, what's already a trend is reduced use of cash in the world, actually globally, the use of cash going down. And of course, what you find is that as a country moves to becoming more cashless, people start to have a higher dependence on the digital ways to pay. Maybe 15 years ago, I would always have had 30 or 40 pounds in my wallet. Now I often don't have any cash in my wallet. And so suddenly, if my digital payment means don't work, it's potentially a problem. And it still makes me laugh a bit. But I remember there was a chain in the UK that couldn't accept digital payments for just a few hours. And this was like a headline news story with angry people complaining that they couldn't buy their product because, I mean, they must have still been accepting cash, but not everyone could pay with cash anymore. So I think you're right. Not that it's trying to replace cash, but that property of cash, that it's highly resilient in times of crisis, is a valuable property for at least one digital payments means to have, especially, as you say, in times of a crisis or a disaster situation. So, Ramuntcho, maybe I can come on to you now and ask a bit about more the technical side or the implementation. I mean, why is it difficult? Maybe some people think should be easy. What's the difficulty in making this work? So what are some of the challenges with having offline digital payments?
Yeah, there is a lot of challenge. In offline, it's a complete new world compared to what we already know by our current payment means. Especially the keyword is trust. The main goal of the solution is to establish trust between all the involved parties. Obviously, the end user, but also the central bank issuing the money. And to establish this trust offline, this means that you don't have a third party that can attest that the transaction is fine. So you have only one person in front of you when you are doing a transaction, and you must trust the people in front of you. And so all the solution must bring this trust that when you are receiving money from someone in the street, you will be able to use this money with no troubles. And for the central bank, when someone is giving money, the central bank is interested that these people has really given this money. So this is really a matter of trust and security.
I mean, I'm not sure how much we should keep comparing to cash, but I always think it's, you're right, it's very obvious, isn't it, when you have given some cash to someone and when you have received some cash from someone, it doesn't require much understanding to appreciate what's happened. And then the physical cash is also the guarantee from the central bank that it has that it carries that value. I did just want to ask as well, because Sylvain, I think very briefly you mentioned the phrase double spending. I don't know whether either of you would like to just maybe clarify that term for people that may not be familiar with it.
I can help on this. In real world, in physical world, when you are giving the banknotes, it is removed from your hand at the same time that you give it. It's an atomic operation. We need to have the same properties in digital world. And as you know, it is very easy to duplicate things in digital world. So double spending is a way to prevent duplicating things in a digital world.
So if I use maybe a little metaphor, it reminds me of if I take a photo on my phone, I can send that photo to someone else very easily. But of course, avoiding double spending would mean, in this case, the photo has to be deleted from my device. It can only exist on one person's device at any one time, because otherwise, obviously, we could just keep creating more and more money if we never actually lose it from our device when it is loaded onto someone else's.
And even if you load, your archive from yesterday. And that's the point for smartphone that could be saved and duplicated. Of course, that's if it's only software that are written on the memory, that could lead to a potential issue here. So that's why we are kind of using hardware secure elements to avoid that kind of solution.
Aha. So maybe, it's a nice link onto then. Ramuntcho, you mentioned this issue of trust between the two parties making the transaction when you don't have a third party in between, but also trust from the central bank side that money is not being double spent and that someone who has received some money really did receive it. What are some of the technologies or solutions that can help to make this work?
So the technology depends of the device that can be used by the end user. One easy device is a smartphone. Definitely, everyone has a smartphone with him. We are used to it, and it's a convenient way to pay. So if you put a software on this smartphone, this software can be attacked in some way, because the first attackant for this is the end user by itself. You have interest to duplicate money on your wallet, typically. So we need to protect the wallet, the offline wallet, from the user itself, basically. And to reach this, we can rely on some hardware security. So we are proposing to use hardware because it provides the highest level of security today. And for this, we can use on the smartphone, for example, dedicated piece of hardware, which are secure element, embedded secure element. It is the same chip that you know on your credit card that you use every day. It is the same kind of technology. And by using this secure element, you can protect and avoid tampering of the wallet. And keep in mind that in case of offline, the money is really on the device. So if you have a smartphone, the money is on the smartphone. So you need to protect the money directly on the smartphone. And also you have some kind of protocol to do the transaction. And this protocol, it is the one that will remove the money from your wallet when you give it to someone else. So the execution of this protocol is very important. And you can have also this through a secure element.
And that's a very important sort of secondary point you made there in your answer, that just like cash, if you lose your offline digital euros, it's gone.
Yes, so it's better than cash in this way. There is some way to give back the money with some limitation. But basically, when you lose your phone, you will lose the money. Yeah.
And just coming back to the secure element, I think what you're saying is that this protects the person who has a smartphone from themselves tampering with it to duplicate or give themselves more digital euros, but also then the communication between that smartphone and the secure element on another smartphone is what allows you to make a transaction where the person giving the digital euro definitely loses it from their phone and the person receiving it definitely gains it on their smartphone. Is that understanding correct?
Yes, definitely. The security element provide you trust to the different party involved. You know that with some kind of cryptography also, everything is cryptographically signed. And so this provides the trust to your third party. And also when you receive the money, you know that the money that you have received is signed from a secure element, and this secure element cannot be tampered.
Okay, that's really clear, Ramuntcho. So in a minute, I'd like to conclude by maybe getting your thoughts more on the legal or the regulatory aspects surrounding this. But first, I do just want to remind our listeners that if they'd like to contact the podcast, get in touch with us. You can write to us by emailing ndp-podcast@worldline.com. Let us know any feedback, suggest topics you'd like us to discuss. And also a gentle reminder to please take a moment to leave a review of the podcast. And if you haven't already, subscribe to us as well. So Sylvain, I said I'd like to come on to the sort of the legal and the regulatory aspects. Are there some concerns about offline transactions in terms of the lack of visibility that banks or law enforcement would have of these transactions, and maybe how it can be misused for things like money laundering?
Yes, of course, there is lots of question around that, but I will start by saying that it will be easier than cash. Of course, we will have a way to follow that, and that's absolutely not the case with cash. And so in that case, this kind of CBDC will be easier to follow by law enforcement and commercial banks. That was one of the points of the prototype that we have done with the ECB on the topic. And there is, a balance between privacy and security that has to be found here. And that's what the ECB is working on. And there is lots of rules that they already have put in place to do that, in terms of reconciliations, of course, but also in terms of limits. You will not be able to move all your money offline and do that for a month without going online. So that will be that kind of limits, or thresholds that will help doing offline when it's necessary, but not being able to do only that and without any reconciliation at any time.
So if I understand well, there are likely to be some thresholds, some limits for how much you can hold in digital euros offline, and perhaps on the number of transactions or the size of transactions that you can complete.
Or the number of consecutive transactions also that you can do, etc., etc. That's that kind of limit. And I'm pretty sure also that the limits will evolve, during the life of this digital euro, because it will adapt to the context and the real use of this digital euro in Europe.
The main point here is to be opposite purpose. In one end, you have privacy, so you don't want to be tracked when you are using the money, as for cash, as for traditional cash. And as you presented, we need to protect and to track money laundering, obviously. So for this, there is a way to lift anonymity in some case when there is fraud that has been detected. So in everyday use, your transactions are not tracked. Nobody knows with who you have spent your money. But if some fraud detection are visible, then we can do exception process and to lift this anonymity. So we can go back to the user using the wallet. An important point is that the commercial bank still are keeping the relation with the end user. The commercial banks are doing the KYC, so they know their user. And through this, you can go back to the end user if some problem arises.
And so if we take a scenario, let's say I load my offline digital euro wallet with some digital euros. Mm. The first control is that the bank, let's say, that's issued my digital euro wallet to me would know who I am. I would be KYC'd. Yeah. Secondly, I would be limited in the amount of digital euros I could load into my offline wallet. But then let's say I pay you, Ramuntcho, and it's a completely offline transaction. And then Ramuntcho, you make an offline payment to Sylvain. I mean, all of those steps are invisible to any bank because it takes place completely offline.
It will depend of the choice, the policy that the central bank wants. But obviously, our goal is to make all these transactions invisible to the commercial bank. So the commercial bank, the same way that just after you have withdraw some cash from an ATM, the bank know how much money you have withdraw, but after there is no visibility. And we want to reproduce the same model there, but we have at least pseudonymized identification, and if needed, we can know that this fraudulent transaction is linked to this wallet, and this wallet is linked to this end user. So you don't have the whole picture, you don't know all the transactions that have been made, but at some point, if one transaction is bad, you can have visibility on the end user in exceptional process.
So no one entity has the full picture, but I guess the point is that if there had to be an investigation made, potentially that could be connected where there is a reasonable reason to do so for law enforcement.
That's it.
Okay. And then maybe coming to one final question I wanted to ask that's perhaps a little bit less technical and a bit more about the human side of this. So I was thinking it's one thing to say offer this functionality to be able to make offline digital payments. But I mean, for many people, are they going to be able to understand the difference? Will they know why they should make an offline payment, why they should make an online payment? There are different thresholds. What are the privacy benefits? As I say, it's one thing to provide the facility, but how are people going to know when they should use each one and kind of what the differences are?
That's a good point. For me, that's the biggest challenge for this. Of course, technical challenge there is big and huge one, and Ramuntcho has shown that there is lots of work to do here. But that's something we can see that we will be able to go through. But for this kind of user experience and saying, oh, can we make that transparent enough to not be something too complicated to understand, but make that understandable enough to be able to see and understand where you will be able to use one of the two wallets that you have, on one online, one offline. That will be really difficult. For me, the point that will help that, and that's just a personal conviction here, is the nice stories that we will be able to express when it will be useful in real life, in real time, how it has been helpful in this specific area because of that, or how it has been convenient for that use case. And it will spread because of nice stories like that, and it will help people understand. But at the beginning, that will be a real and big challenge.
Which I think reminds me that there is often an education part associated with any rollout like this. But secondly, also, ultimately, people will need to have some experiences in order to understand the benefits. So I guess once someone has made their first transaction peer-to-peer without internet connectivity, they'll go, all right, now I get it. So I should keep some euros in this wallet, in this part, so that I can do that. But until you've done it, it's often very difficult for people to really appreciate what the benefits and trade-offs are.
And maybe one of the difficulties is for us, solution designer, to make it transparent to the end user at the end. So when you pay, you should not care about if it is online, offline. You just want to pay. If you have someone next to you, you tap your phone and you pay. And there is all the magic behind that take care of everything. So this is the ultimate goal, obviously.
So I think for me, it was really interesting in this discussion to firstly unpick some of the finer details, I would say, but also address some of those bigger questions about why is this functionality being looked at for the digital euro, and also the kind of the legal, the ethical, and the more human side of it as well. So you can see it's interesting to me as well that it's one part of the digital euro project, but even just one part of the digital euro project can have a whole range of interesting aspects to it. And like I said, it's been great to have first-hand experience and insights from two people who've been really closely involved with the project so far. So thank you so much for joining the podcast and sharing all of this. Sylvain, thanks for being here.
Thanks. It was really an interesting discussion. Thanks a lot.
Likewise, great to have you here. Very interesting. And also you, Ramuntcho, thank you so much for joining us.
Yeah, thank you to you.
And that just leaves me, as always, to thank finally our dear listeners for joining us once again as we navigated digital payments.
Thank you for listening to the Navigating Digital Payments podcast, brought to you by Worldline. Join us next time to learn more about the latest innovations, trends, and predictions for the future of payments.